Hi guys, in this video we're gonna talk about trap trading. Might have heard about that concept, and also I'm gonna discuss about liquidity grab. How do this smart money they operate, and how do these institutions, large institutions, how do they trap retailers like me and you? So this video is gonna be really informative. If you stick till the end, I bet you're gonna learn some stuff that you might not have heard before, or sometimes, like, even if you pay a lot of money for these courses, you might the people don't talk about that as often, but that happens almost every day. So let's dive straight into it. A lot of time you're gonna see these trend lines, right? Or these support or resistance zones, right? Let's say this is the zone. So if I bring that up, this tool, this one. So for example, the price bounced right at that level, right? And then again the price bounced right at that level, then again another level, at the same level the price bounced again. And then we see over here that it's this one, right here. That's not good. This arrow I'm gonna do it. Okay, this one right here. So this one, we can see this actually created a big large candle and actually broke this trend line above, right? So what me and you and a lot of other traders gonna do, we're gonna do this. Let me show you what we're gonna do. We're gonna do this, something like this, right? We might gonna place our stop loss right below over here at the swing, right? And gonna try to take a 1:2 or one, whatever your goal is for that. But then as soon as the breakout happens, the price reversed, right? And technically hitting our stop loss, right? So what is going on over here, right? I mean, that was a clear breakout, but as soon as we took the trade, the price reversed, right? Okay, another example, right? Another example right here. This one, you see, perfect bull flag, right? You take a long position like this, probably, you know, and then what happened is price move in our favor, then it reversed like big time. This huge big candles gonna scare a lot of buyers from their position. A lot of them, we're gonna close our position because we're gonna be like, oh no, the market is reversing, and we might gonna exit out early or something like that, right? But some people who have their stop loss like right here might you know get a good gain. But again, the thing what I'm trying to tell you is, as soon as it break out, the price reversed, right? Kind of retracted a little bit. Another example right here, perfect head and shoulder, right? It's not gonna get better than this, right? Whenever this is happening, remember the market is inviting you into something, right? This is a shoulder, and it created this head, bounced off at the same level, right? Couple of times actually, and then this is another shoulder, right? Right here, bounced off. Sorry. By the way, this is S&P 500 MES, micro E-mini S&P 500 futures, which is kind of like basically you're betting on the future price of the S&P 500. Anyways, so what we see is, then, like, this is a perfect textbook level head and shoulder example, right? And then we see this huge breakout, right? Right, we see this, right? Like, just imagine you are a retail trader closely glued to your screen and looking at this head and shoulder pattern, right, forming. And the market is like right here. Let me go do this, play this. So market is like, oh shit, this is a head and shoulder, is gonna bounce right back. Or so remember, head and shoulder is a bearish. Uh, if you read in the textbook, it's a bearish signal, right? Supposed to do something like this and then go down, right? This is what we all have learned, right? Watching all these YouTube videos. But then again, what happened is the price gave a clear breakout of this head and shoulder, and right about here, boom, clear breakout, and couple of confirmation candles as well, right? So what we're gonna do is we're gonna short, right? We're gonna go like this, boom, and watch this trade play out, right? Like that, something like 1.5 or something like that. But then again, what happened is the market boom reversed and hit our stop loss. Isn't that crazy? So, yep. So this is what a trap is, you know. These big institution traders are creating these trap in order to grab liquidity from us. They're not trying to trap us, but what they're trying to get is liquidity. Like liquidity. The reason for the liquidity is because they are big players, right? They're trading like large positions, like this many shares probably, right? Of SPY, let's say 100,000 shares, maybe more, right? This is how they're trading. You know, they have large capital, huge pool of money, which they're trading, clients' money, right? So let me show you something real quick. So this is an order book. So whoever plays the order at whichever range, it shows over here the amount, right? These are the order plays. These are the limit order placed of people like me and you, right? So like 37 at this level, 3738 is only 11,000 shares, right? And then 3739 is 19,601 shares, right? This is just an example here. This can be low, this can be high, depending on the type of stock you are trading. But the thing what I'm trying to tell you is at each level there are limited sell orders, right? Or there are limited buy orders, right? So what's going to happen if these big institution traders place, for example, a sell order, right? They want to sell a stock. So if they place some sell order at the market, you know, not the limit order, but if they place directly 10,000 shares at the market, so some of their orders gonna execute maybe at this level, right? And then some orders gonna execute maybe at this level, and then some order gonna execute at this level, and then some order gonna execute at this level, and the market gonna keep falling down because the amount of the shares they are trying to sell in the market, they just don't have enough buyers, right? So if we go back to the order book, for example, if somebody's selling, so first this slot is gonna be filled out, then this slot is gonna be filled out, then the above slot is gonna be filled out, dun, 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 all of these orders gonna fill out in order, right? So once each slot is finished, then the next slot is going to be available for for more buyers to buy. For example, what I'm trying to say, if I sell 100,000 shares, first the 3737 level gonna fill out, then 3736 level is gonna fill out, then 3735 level gonna fill out, then 3734 gonna fill out. You get the point, right? It's not gonna fill out exactly at one price, right? Because if I'm trying to sell, I need the same amount of buyer to buy it from me, right? So this is how it's gonna look like, and the price is gonna keep going down because there is more supply than demand. So the price is gonna keep moving down, right? So what's gonna happen is once my all of my order is gonna filled, the price is gonna be at this level, right? Maybe all the way at the bottom, right? And then me being an institutional seller, I didn't get the best price to sell my shares or to short my shares. I didn't get the best price in the market because the price keep going down, and you know my complete order got completed at this level. And now at this level, what can happen is people can start buying, right? And the market can go up because people might gonna be like, okay, or another institution might gonna be like, okay, the price is really good discounted price, let me just buy it right now, right? So instead, what they're gonna do is very interesting thing I'm about to tell you now. Let me remove all of this. Okay, so what they're gonna do is they're gonna create these one of these textbook pattern, right? Which we have all learned on all these YouTube videos and all of those texts on the books, technical analysis, you know. That's what they're gonna try to make or mimic in order to entice us, right? For an example, they might gonna make something like, sorry, they might, I need a clear screen that looks much better. So for example, the price is moving like this, right? It's in an uptrend, right? And the institution is like, okay, we wanna buy, right? But if they start buying right now at market order, like I said, it's gonna fill up. Some order is gonna fill up here, 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 you know, and they're gonna end up getting the worst price, right? Or not the best price, I might add. So what they're gonna do is, for example, the market is going like this. What they're gonna do is they're gonna start shorting some shares, right, in large quantity. So what's gonna happen is gonna market is gonna start going down, right? And then they're gonna start buying some, right? And then they're gonna short again, and they're gonna create something that looks like the textbook bull flag, right? So they sell some shares over here. They created this thing, a little retracement, and they bought back again. They sell again. They bought back again, right? To create this textbook bull flag, right? And then what they're gonna do is they're gonna buy a little bit more, so it's gonna show as like a breakout, right? So what me and you is gonna do is we're gonna be like, okay, it's a breakout, let's watch this trade play out. We're gonna be something like this, put our stop loss right here, and then we're gonna do like this, take profit like that, right? Let me just log this. And then what they're gonna do is, so remember, our thousands of stop loss, thousands of them actually, are right here at this level, right? At this level. So remember, as soon as the market come at this level, there are a lot of sellers in the market. You getting it? Not a lot of people gonna tell you this. This is very important, guys. Very important. So at this level, there are, let's say, thousands. There are 17230,000 stop losses, right? Because everyone saw this breakout and everyone is doing that, exactly that, putting their stop loss right below the last swing low. So there are 1,723,000 limit orders, stop limit orders, that is ready to dump all of these share at this price into the market. There's a lot of supply over here. You know what I'm saying? If you guys master this, you're gonna get rich. I'm telling you. I don't know. Maybe this video is gonna taken down for some reason because I'm telling too much secrets. But you know, it is what it is. I don't give a, So right at this level, there's a lot of supply of more than 1 million shares. I'm just giving an example, right? So what's gonna happen is now these people who got tremendous amount of shares gonna sharply start selling a lot of shares. So what's gonna happen is the market is gonna go down to the place they're gonna start selling a lot of shares. So what's gonna happen is um hold on. Yeah. So yeah, what they're gonna do is they're gonna start selling some shares, a lot of shares, and what's gonna happen, it's gonna hit the price gonna hit the stop loss, right? It's gonna hit our stop loss, and then what they're gonna do is they're gonna place their buying order of 1.7 million shares. I'm just giving an example, and the market is gonna shoot up while everyone else stop loss is hit. They got the liquidity that they needed at this level, and all of their orders, all of them got filled at one single spot because all of our stop losses were right here, right? Or let's say all of our stop loss were within this zone. I want to say, right, within this zone. I cannot say like all of our stop loss was at $5,959 level. I want to say that it was within this zone because everyone has a little bit different tolerance, right? So their market order got filled and they were able to buy the stock at a very good price, and then they keep on buying and keep the price going up and up and up and up, and then they sell somewhere right here, somewhere at this level they sold, so they made huge profit. So this is how these institutions they are functioning. For example, right here, right, the stop loss got hit, boom. Like I said, everyone would be like, okay, it's a head and shoulder. What we're gonna do is we're all gonna go short right here at this level and watch this trade play out. And what happened is they start buying, and this big institution candle right here, this big wick, took all of the stop loss, right? And they sold, all of them sold, and all of us, we buy our short position back, and they were able to sell it in the market, and then they were able to move the price back down, you know, getting this much, $9 move. And I bet by tomorrow this might gonna fall down more because they have a lot of buy orders. So you see what I'm trying to explain in this video. This is a very important concept. This is how the trap trading works. This is how we get trapped. You know, this is how they get their order filled at the best price they can. It's not like they're hunting us, they're just trying to get their liquidity because they're trying to make money for their clients. But we gotta be more smart about it, right? For example, right here at this level, look, trend line broke, the price went down, and then it reversed, right? Me and you might gonna go short like this, putting our stop loss right here at this level, and maybe take profit 1:2, and then look, our stop loss got hit. So you're gonna see this working a lot of times. I'm not gonna say it works 100% of the time, the trap trading, but it really, the market is really doing that, especially on a Friday. I have noticed, you're gonna see a lot of this sort of trading is you're gonna see a lot of this sort of trading happening, like right here, right? Price bounce, breakout happened, the price reversed big time. So people gonna be like, okay, I'm gonna go long, putting our stop loss on recent swing low, and then what happened? The price reversed, hitting our stop loss right here, and then the price keep moving down. That's gonna be it for this video, guys. Thank you.